Welcome friends and traders, my name's Tian and I'm your host for today's UTP lesson on strategy number 5, and today is Thursday the 23rd of March 2017. Thank you everybody for joining. Before we continue, may I please confirm audio and visual? Do we have sound? Great stuff, great stuff. Thank you, Dale. Thank you, Tom. Thank you, Andrew. Thank you, everybody, for joining. Welcome, Larry. Right, now today, strategy number 5, and this is about trading candlestick formations at past resistance, future support or past support, future resistance inside the ABCD price swing to the D extension with the stops beyond the A. Now, there's a phenomenon that takes place in the market. As an uptrend forms by making higher highs and higher lows, as it retraces back inside the AB boundary or the latest up move, it usually bounces or U-turns at past resistance, creating future support. This phenomenon takes place on all time frames, and traders look for these locations to provide entry opportunities. Thank you, Mark. Right, now past resistance can become future support in an uptrend. There we go. The market is making higher highs and higher lows, and if the market creates a level of resistance, the moment it breaks that resistance, it will become future support. The moment it breaks past resistance, it will become future support. Now you will learn an MTI strategy on how to buy future support in an uptrend. So if you have past resistance, then it's a good idea to buy future support. Buy future support. Buy future support. Now buying past resistance, becoming future support in an uptrend, when the market retraces back to past resistance, buy bullish candlestick formations or counter uptrend line breaks. Buy bullish candlestick formations at past resistance, becoming future support or a counter trend line break. So here we have an example of an up AB boundary, and then the market retraced back inside the AB boundary to give us a C at past resistance, becoming future support. We have a bullish candlestick formation over here in the form of a bullish piercing line candlestick formation. The market also broke a counter trend line. So as soon as the market breaks the counter trend line, you can enter with a buy and then target the D extension, but exit 10 pips before the market hits the D and place your stop 10 pips below the A low. Right. Now there's a phenomenon that takes place in the market as a downtrend forms by making lower highs and lower lows. As it retraces back inside the AB boundary or the latest down move, it usually bounces or U-turns at past support, creating future resistance. This phenomenon takes place in all time frames, and traders look for these locations to provide entry opportunities. So past support can become future resistance. Here we have past support becoming future resistance. Past support becoming future resistance. Past support becoming future resistance. And now you will learn an MTI strategy on how to sell future resistance in a downtrend. Sell future resistance, sell future resistance. Here's an example of selling past support becoming future resistance in a downtrend. Sell bearish candlestick formations at past support becoming future resistance or with a counter trend line break. So there we have a down AB boundary, and the market is retraced inside the AB boundary, bounced at past support becoming future resistance, and there we had a bearish candlestick formation, and combine that with a counter trend line break. You can then look for a sell all the way to the D extension. Place your stop above the A and target 10 pips before the market hits the D extension. Before I continue, is everybody with me up to this point? Okay, beautiful. Let's just go and have a look at how past support becomes future resistance. I'm going to open up a new workspace here. There we go. Let's just open up any chart. Let's open up the Aussie Canadian. Let's load the 2-hour chart. Hi there, Shamil. Welcome, 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 welcome. Right, now we can see the preceding movement was up. Let's have a look at this move here. Here's an example of how past resistance can become future support. Right. So the market was making higher highs and higher lows. It was trending up. Low, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So there's the higher high. Now we have a higher low. Now we need to see if the market's going to break that higher high. There we go. The market broke that higher high. Now all of a sudden that level of resistance will become future support. There we go. Right, so now we have a higher high. There we go. And let's see what the market did here. Right, so we have past resistance. Becoming future support. There we go. So the market returned to bounce at that support. Type of wire yes if you can see that the market bounced at past resistance or broke past resistance and now it's converging with future support. That would be a great spot to look for a buy. Okay. Shamil, thanks for asking. I'm doing fantastic. On top of the world as usual. Feeling like $1,000,000. As long as I've got coffee and I've got your company, I'm a happy camper. Right, so there we go. The market bounced its support, tested that one again, and then carried on moving higher. Right, there we go. So this is an example of buying future support, which is past resistance. Let's have a look at past support becoming future resistance. Let's see what we have here. Market was moving up. Okay, the market didn't bounce over there. Let's see if there's an example where we are at the moment. Aha, look at this. This would be a nice live example. We can see here that the market has been making lower highs and lower lows. Now, this low over here was a low of support. Right over there. Low of support. And that will become future resistance. So I'll be watching this one, and as soon as the market starts to retrace, to past support becoming future resistance, I'd be looking for a sell over there. Right. Now let's go and combine this with our Fibonacci's. Right, and let's just go back to the manual. So here's the nitty-gritty of strategy number 5. Once again, It's about trading past resistance, future support, or past support, future resistance inside the ABCD price swing to the D extension. Now the first step would be to compress the chart and see if the market is in an uptrend or a downtrend. Let's go and have a look at what we were looking today at in the Analyst on Demand. Where's a nice opportunity that we can use for an example? I think the Aussie CAD will give us a nice example here. Right, let's open up a daily chart according to the manual. There we go. And the manual says compress the charts and see if the market is in a downtrend. Then find and mark your current ABCDs, sub-ABCDs and Fibonacci's on the daily chart and the 2-hour chart. So what I'm going to do is I'm going to open up a daily and a 2-hour. There we go. So there's a daily chart on the right. There's a 2-hour chart on the left. And let's compress. Come on. There we go. Compress this chart and let's have a look at the most recent trend. Now if you had to look at this picture over here, where's the most recent trend? And please take into consideration the whole chart over here. Do we have a trend or are we sideways? Veronica says sideways. I agree with you. So let's go and mark the high of this consolidation. And then mark the low. There's the low. And now we can see that the market would move from support to resistance, and then again from resistance to support, and then again from support to resistance. And now the market has bounced at resistance, and now we could be heading to support again. There. Support is over here. And we just bounced at resistance yet again. So this would be downside potential if we're going to trade the range for about 1,000 pips. Okay. So the market moves up within this range, up, then down, then up, and now we could potentially be moving down. So in essence, we would be trading a downtrend here very soon. Does that make sense? We would be trading a downtrend line here, or a downtrend very soon, all the way to the next level of support. The market might be waving down now, all the way to that support. And that would give us our downtrend. Alright, does it make sense so far? Is everybody with me up to this point? Okay, money is made when we sell high and buy low again. Right. Okay. Now the manual says compress the charts and see if the market's an uptrend or a downtrend. Okay, we would be moving in a downtrend very soon. Find and mark your Fibonacci's on the daily and the 2-hour. Right. So let's see what we have from the daily. Now, due to the fact that the market has now bounced against resistance, I am going to start my Fibonacci's at this high because now we're trading the range. And look at that. Now we have a down AB boundary. There we go. There's the down AB boundary. We have an A over there. We have a B over here. And we have a deep C over there. That's the C. And that high was just above the 8.6 retracement level. So that means we retraced to the 8.6. And that means the D extension is going to be the 1.18 extension at 9763. So the D extension would be over there. And now by the looks of it, we are heading from the C to the D. And the reason I say we're heading from the C to the D is because the market has just broken a counter trend line to the downside to confirm that we are heading from the C to the D. Type of wire yes, if you can see that due to the fact that the counter trend line has been broken, we are now heading from the C to the D. This is a down push zone, and this will be downside potential for the next 429 pips. Like that. Andrew says some of these pairs oscillate very nicely within a predefined range, don't they? Useful to know the structure of the country's trade agreements. I agree. I agree beforehand for trade purposes, the range of the currencies. Right, so that's great. So now we're heading down for the next 429 pips. As a matter of fact, I can see that the daily stochastic is also bearish. So everything is pointing to the downside here. And that means I need to go and look for a sell on the 2-hour chart. Right, and that's what the manual says. The manual says mark your fibs on the daily and the 2-hour. Now I've just marked my fibs on the daily, and now I'm going to mark that on the 2-hour. So there's a daily chart. Right, we're heading from the C to the D. Let's type it here because that watermark is a bit transparent. So that's the daily. And now let's go and have a look at the 2-hour. Now on the 2-hour chart, I would like to link that counter trend line that got broken on the daily, and then also our next level of support, which is going to be the daily D. There. So this would be the daily D extension. And that is 429 pips away. Now let's go and have a look at the Fibonacci's on the 2-hour chart. There we go. Now the market first of all has been waving down lower highs and lower lows. So I might as well mark these lows of support that will become future resistance. There we go. So there's another low of support. Okay. So moving up, we will have resistance over here. We will have resistance over there. There we go. And that will be support. So let's start the Fibonacci's at this highest high, because that's the highest high that the market made before it broke the counter trend line, which is also the C of the daily. I can link that to double check. Look at that. That's the C. I've just linked that yellow circle. So that is most certainly the C, and that's going to be the spot where I need to start my Fibonacci's on the 2-hour. So now I've opened up I've marked my fibs on the 2-hour chart, and let's go and have a look here. Right, now first of all, I can see that the market has just established the B low. So we have to still retrace back inside this AB boundary and then come down. Now, where do you think the market is likely to make a U-turn? Because we have our A over here, we have our B over here, but we have no C yet. Where do you think the market is likely to make a U-turn? Tom says at the first resistance. I hear what you are saying, but I don't regard that first resistance as as that significant. Ashley nailed it. Ashley said at the back of the trend line. Because first of all, over here at price point 1.0279, let's make that bigger. 0279. We have a confluence. 1.0279 is a confluence of resistance levels. Firstly, it is the down FIBS 86 retracement. Right. It's the 86 retracement over there. So I can mark it. So that bar support becoming future resistance forms a confluence with that 86. All of a sudden, because of that observation, this one carries more significance than this resistance over here, because it forms a confluence with a Fibonacci level. Also, in the event that the market should start retracing, we will most probably see the market retrace to the back side of that trend line, then bounce at resistance before it comes down to support. Let me just change that color. Over there. And if the market should retrace to the 86 retracement level, then we could see the market actually hit that 1.18 extension, which would be the D. So that would be the D extension, and that would also be the target. There. Tom says, please explain the confluence. Okay. Confluence just means a level where multiple resistances or support meet. Okay. So with regards to the first resistance, I regard that one as more significant due to the fact that it's forming a confluence with that 8.6 retracement level. You see, they all meet at the same spot. Now, if you want to sell at this resistance, you may find that the market will move against you and give a deeper retracement. That is the point that I want to bring across. Does it make sense? Mark says, would you enter at 1.0279? It's looking mighty good. I wouldn't mind placing a sell limit order there. I wouldn't mind. If that's the case, if that actually happens, if this plan now pans out according to what I explained, then we might see a slightly deeper tip of this crown formation as well. That would be the left tip, center tip, right tip over there, and that would be the crown as well. Look at that. And the deeper or the closer to the A I sell, the better that would be for risk-reward purposes. Andrew says, I favor the first resistance myself. There's a confluence with a 50 retracement. Also, the retest of the trend lines comes sooner. I hear what you are saying. If the market's going to retrace to that 50 and I place my stop above the A, I'm not going to take it. Okay, so let's work out the risk reward if I wanted to sell at the 8.6 retracement level. The spread here is 3 pips. So my entry would be 1.0279. My stop is going to be 10% of the daily trading range above the A. Let's go and consult the manual quickly. Stops can either be beyond the A, beyond a 25-degree trend line, and 10% beyond the lows of the candlestick formations in an uptrend, and 15 pips beyond the highs of the candlestick formation. Right, so 10% of the daily trading range beyond the A. So the daily trading range on the Aussie Canadian is 67 pips. So that's round about 7 pips. So the daily trading range is 10% of the daily trading range would be 7 pips. Therefore, my stop will be 7 pips above the A plus the spread, and the spread is 3. So 10 pips above the A, I'm going to place my stop, and the A is at 1.0295, so my stop is going to be 1.0305, and that means I'm going to risk what is that, 21 plus 5, that's going to be 26 pips risk. There we go. And then my target is going to be 10 pips above the D extension plus 3 for the spread. So 13 pips above that D is going to be 1.0169. 1.0169. And that means I'm going to target 110 pips. So 110 pips reward. Okay. Does it make sense so far? Is everybody with me up to this point? There's the trade parameters. There we go. Andrew says the 618. Yes, I hear what you're saying. I hear what you're saying. It could be. The market could retrace to the 618. Okay. It could, by all means. But if it retraces to the 86 retracement level, I would love to take a sell here. Because now, if we have to work out the risk reward here, then my stop is going to be 1.0305. There, that will be the stop. Okay, and this would be the entry. That means I'm going to risk so much that will be the risk. So I'm going to be risking so much to make so much. Oh, and that target is going to be just above the D extension, so that will be 1.0169. There. Just take this out, yeah. 1.0169. So that will be the actual target. Okay, and that will be the D. And that means I'm going to be rewarded with so much. Now, how's that for a risk reward? Isn't that just fantastic? Hey? Look at that. Beautiful. Dale says magnificent. I share your sentiment there, Dale. If this one can just retrace to that 86 retracement level, I'd love to look for a sell over there. Now the only thing I'm going to need to wait for is, let's just take out the crown over here. The only thing I'm going to have to wait for is for the market now to retrace, and I'm going to draw hypothetical bullish candles here, and I do understand that the market is not going to retrace in a straight line, but just for illustration purposes I'm going to draw bullish candles over here. So wait for the market to retrace. My retracement doesn't look that good, but in any case, wait for the market to retrace and then hit that resistance. Then I want to see a bearish candlestick formation, because the manual says if the market is in a downtrend, find and mark power support inside the down AB boundary and at that location trade a bearish 1, 2, 3. Look for a bearish candlestick formation along with a counter trend line break. So there we have inside the AB boundary past support becoming future resistance. Then I'm going to wait for the market to give me a bearish candle or a bearish candlestick formation, right? Hopefully at the back side of that trend line. This would be regarded as a bearish engulfing candle, and I'll combine that with a counter trend line break, and then I would sell at the open of the very next candle over there. Right over there. I would be selling over there. Okay, so if I sold over there, then my entry would have been more or less over there, and my risk would be a little bit bigger. Like that. Entry over there. And this is just hypothetical, just for illustration purposes. So that sell would be, call it 1.0265. That means I'd be going for 96 pips, and I'd be risking 40 pips. Okay, but this is strategy number 5 in a nutshell. Right. I'm gonna allow you a minute or two just to take a screenshot of this, and you can print it out and stick it against the wall. This is strategy number 5. There. Mark says, would you place a market order now or wait until it gets to your entry point to do it? Well, that's a good question there, Mark. If you want to follow strategy number 5, you're going to have to manually watch the market until it bounces against that resistance at the backside of the trend line, and then wait for a candlestick formation, and then you can manually take a sell. But I have found that sometimes these trades could be triggering or at the right spot for a sell while I'm asleep. So if it looks as good as this, I'll go ahead and place a sell order at that high. And the market will then automatically trigger my sell in the event that it reaches that resistance. Okay. Tom, yes, I'll make the Aussie Canadian workspace available, but in the meantime, for this illustration, just take a screenshot and copy this down, and just type a DONE done when you've copied this down. Andrew says this could come off nicely. I agree. I've been waiting for a sell on the Aussie Canadian for well over 2 weeks now. Andrew says, how about I split my trade 3 ways and come in at the FIP 618, 786, and the 86? Yes. Then you'd be following the what we teach in the power FIPs. No problem there, Andrew. No problem. Okay, guys. Did you enjoy the lesson? Did you learn something today? Nice, huh? I'm going to discuss this one in the AOD. I'm going to place a sell order there, but I'm going to discuss this one in the AOD when we get back. Right, thank you, thank you, thank you, thank you. I'll see you guys back in the Alice on Demand. Thank you so much for joining and for your participation. Cheers.